So while we do so, while we get ready and while we give a quick makeover to the stage, it's time to also gear up for the very first panel discussion around the Indian realty growth curve reaching $1 trillion by 2030. Now, this particular session will be chaired by Mr. Anuj Puri, Chairman, Anarock Group, who comes with over 30 years of prolific experience in the Indian and global real estate markets and is also a trusted advisor to developers, occupiers, investors, and the government. Now, he set up Anarock in 2017, and under his leadership, Anarock is now the largest independent residential agency in India with significant presence in the GCC countries. So we will be having Mr. Anuj Puri to spearhead this particular discussion for all of us. Now, that being said, as you can notice, we also have our stalwart speakers joining in for the panel discussion. While the tables and the chairs are being set, let me also take the opportunity to quickly introduce our speakers. We have the august presence of Mr. Boman Irani, Chairman and Managing Director, Rustomjee Spaces, who's a first-generation real estate developer and an entrepreneur with over 23 years of experience and knowledge of the industry. We also have with us Mr. Mohit Malhotra, CEO and Managing Director, Godrej Properties, and having been in the real estate industry since 2006, having joined Godrej Properties in 2010, he's instrumental in driving the company's growth, leading Godrej Properties to become the #1 player in the NCR market. We also have with us Parth Mehta, founder and managing director, Paradigm Realty, who comes with over 12 years of rich experience in the real estate background, having started his venture in 2015, enabling the brand to carve out a niche of itself. We also have with us Ritesh, Vohra, partner and head real estate InvestCorp, who's been a financier, an advisor, and an entrepreneur over the course of his real estate career and associated with a number of property developments across India. And finally, we have with us Mr. Subodh Runwal, managing director of the Runwal Group, who has over 2 decades of prolific experience in the real estate industry and brings a broad vision with the best management practices. So that being said, we're going to just request the team, if you can please come forward. Let's separate the tables slightly. Let's just separate that. And let me quickly invite our speakers on the stage to please come forward for the discussion.
Yep. Otherwise, I can read your script. Thank you very much. Come, Mohit. It's a very eclectic, smart panel that we have. Huh? I am standing. When you are at Atul Batra's event, you can't sit. No, I know. I was just wanting to understand. Good. It's a great time to get into discussions on what's happening with the Indian real estate industry, and more particularly, how we're going to reach $1 trillion by 2030. I mean, it is amazing to say is that whilst as a GDP we're looking at $5 trillion, real estate is going to contribute $1 trillion of that. And it doesn't really surprise me is because if you were to look at many of the mature markets, US or Europe, or even for that matter, China, 25 to 30% of the GDP is actually being driven by the real estate sector. In India, we are at 11% currently. So, we're trying to see is if this can also be pushed to 20, 25%. And I do feel is that the way the government has put together the norms and the way that they have put the revised regulations, I do feel is that we are on a trajectory for $1 trillion. We have very smart panelists here. We got about 50 odd minutes, and then I'll open it up for a Q&A to the floor. My first question, Boman, to you is, we're seeing a lot excitement in the real estate industry. In the last 2.5 years, we've seen a lot of excitement. This festival season is hopefully going to be COVID-free. What are your thoughts on the sales, residential sales for this festive season?
Finally, it takes Anuj to solve the problem. Okay, guys. So first of all, Anuj, your question around the last 2.5 years. We've been through COVID, and I think people have taken the strongest punches on their chin, and they're still standing.
Very true.
That is a human nature, resilient as we are, and especially some cities like Mumbai have really stood up faster than others. So I can just say this, that this Diwali is probably, though Anurag said, it could be better, we always want more, but this Diwali is probably that one time when a lot of people are making decisions, and we saw this at a property expo that we just had. We finished on Sunday, and in spite of the rains, Anuj, in spite of it, pouring down, I saw people walking in, and probably the highest number of walk-ins since 2015.
Wow.
So the last time we had walk-ins like this or more than this were in 2015, but we had 36,000 plus walk-ins for the property expo, where 2 days were almost a washout.
Wow, well
So
done.
that itself, speaks volumes. The buyers are all looking at a deal. I think a little bit of a conversation that you and I had right now, I'm sure the educated buyer understands that even with the increase in interest rates that is going up, this is not going to be perpetual. He's not locking himself in. So this is going to go up and down, and maybe at some point of time generalize around the 7.5%, which is digestible. But should he not, let's say, lock in his property today, the inflation itself is going to outprice the property for him in time to come. And today, with the disposable incomes, with the new jobs that have been created, with the kind of increases people have got, with the reduced expenses that they had during COVID and the savings that they have, I think they're in a much better position to be able to take on, let's say, that little bit of a larger than what they could afford earlier apartment. And residential development across the city, especially where the infrastructure is growing and where deals are being offered. Very important. Deals have to be offered. Like Anurag said, Indians are always conscious about price. I think they're more conscious about deals. If you give a camera, it's okay, but you need the bag with it. So wherever deals are offered, and smart developers are doing just that. They're either giving an interest rate kind of a cushion as of right now, or they're talking about payment schemes where you pay 20% now and 80% later. All of this has become run of the mill. It has become important. It is no longer only the one or two or three of the people are doing it. Each one of us is doing it in different ways, and it's working out quite well. I see this trend continue. I saw a lot of new launches at the expo, at our expo, and on the last day walking around, I did a quick dipstick. I even went to your stall, Parth, and people were extremely happy. I mean, I'm talking about the exhibitors were extremely happy. They had serious walk-ins. They had people spending time out there, and these walk-ins were then converted into site walk-ins itself. And the financial institutions, SBI was there, Union Bank were there. SBI went and told me that they crossed about 450 crores of disbursals right there. So that speaks volumes of the kind of business that was done. So hey, overall, it still is not doom and gloom, which the papers are all talking about. There's still a lot of spirit left in this business.
And particularly this festive season, you believe that will be a pretty decent festive season, irrespective of the mortgage rates and the price hike on the real estate.
I say this, an educated customer is always a better customer. What we've started doing is there are no longer salespeople, but there are guides that we put up out at all our sites. We talk about all the issues. It's never leave the elephant standing in the room. So the moment a person walks in, they say, oh, but the prices are high, this, that, and the other. These guys start talking about it. And the one thing that we've started telling people is, look, you had 6.5 or 7%, which was probably the lowest in the history of, at least Deepak Bhai said it himself, that in his lifetime he never saw interest rates so low. And probably somewhere around February this year, you might see interest rates at the highest. So in 1 year, you'd have had the lowest to the highest. But that's not going to be permanent. It is going to rationalize as per the markets itself, which means that you'll have a 7.5% mean in terms of your interest rates, which is acceptable, which should be more than acceptable. Even if it's at 8%, it should be more than acceptable, because developers are subventing them with various schemes itself. So we kind of address that, and we see that the customer's interest is automatically moved. If I keep reading doom and gloom, I'm only thinking doom and gloom. You got to move him away. You got to take the narrative to where you want it, and then distribute or show them the products that you have.
But I'm going to ask you a little bit controversial sort of question. You said is that there was a lot of punches, and I believe in that as well, is to the developers, COVID being one of the last, prior to that, the NBFC crisis and, RERA and demonetization. And many developers weren't able to take those punches. You said is that, we were standing. I sort of slightly disagree with that, is many people are not standing. So what happened? To those who were not able to take the punches, what were the reasons for them not to be able to strongly, stand up to the challenges that they faced?
So I'll tell you what the people who are standing did, right? And that should.
I think that's a good idea. Yes.
That should give you an idea of what the people are. One was, I think, some of us just decided not to give in to the situation as it stared us in the face. What we did was we looked at the slightly longer term. And having said that, I should tell you, the day our Honorable Prime Minister announced a lockdown, I actually thought it's doom and gloom. So for the 1 week when I thought that, the whole world's come to an end, I kind of just withdrew from making any kind of calls or statements, because at the top, any statement made could lead to jitters down the line. So I just said, listen, let's lock ourselves up. None of us know, and I suffered this during the Lehman crisis, right? We had gone and made a big property purchase, went around talking to everybody, and everybody did not know anything, but everybody wanted to speak. So I said, listen, there's the one thing we will not do. And the developers that continue to be there worked on, let's say, prioritizing the projects that mattered to them. So I can tell you a few of our friends usually took up the projects that were 70% complete and said, hey, if all our resources have to be put in only on these projects, let's do it, rather than trying to complete all projects one point in time. Because you were faced with so many problems during the COVID crisis. You had labor running away, you had all kinds of material supply issues, basically just a breakdown of all systems, right? So we just started focusing on projects that mattered and tried to get them off. Like if you have too many problems, you start dealing with the ones that are easiest or closest to fruition. The other thing that we did was, we didn't shy away from speaking to financial institutions and saying, hey, we need the money, okay? You need to stand with us, and we stand committed to kind of pay you back. One of the things we did was even give a return to an investor who wanted a return during the COVID time, but then we went to someone else and we just raised the money. So I think relationships helped. Relationships that were cultivated in the past helped us during this time. Having a slightly longer term perspective helped. Prioritizing over issues helped. Not unnecessarily passing the panic down to the lowest. We did speak to our people and we told them that, while there will be cuts right now, we assure you if things change, we will pay back. And we paid back, rather we gave back 100% or more to the people that were at our sites. I think things like this help in building companies. One should, as a leader, be cognizant of the fact that you're not in this game for the short-term. Real estate or any other business, if you really want to succeed, is a slightly long-term game. You have to look far ahead rather than right there. And just to answer your question, the guys who may have fallen by the wayside were only in this business for the money. I think, survival of the fittest is something that we should all allow as an evolutionary process and keep going at it, right? So it's okay. People have to fall by the roadside, and other
absolutely, I agree. I mean, beautifully what Boman said is fourth thing, you prioritize what is going to come to fruition quickly. Second is relationships that were built over a period of time actually stood good cause when the times were bad. Third is, whilst you were panicking, but you were not passing that panic down really to the lowest level, because that would have created trouble. And the fourth one was that you have to have a long-term view of whatever you are doing it. And that's what I completely agree, Boman. Those guys who had that, who had relationships, who had the ability to be able to complete some of these projects even during tough times, were the ones who actually won over the others. Mohit, two questions to you. One, Boman said is that, we are in good times. Do I take it that the Indian real estate cycle is in a long-term sort of upward growth trajectory? And if it is, what do you think are the factors for them?
Yeah, hi. Good afternoon, everyone. Yeah, I do strongly believe, Anuj, that we are on a very positive upcycle, probably lasting another 8 to 10 years. And we are at just start of a major upcycle. And three reasons. One is the larger macro reason. The Indian economy is expected to grow between 6 to 8% despite, whatever is happening globally. So that is a major trigger. Other macro factor is, the growth of urbanization in Indian cities, which is still going to continue at a rapid pace. So these are two major macro factors which are very positive from a long-term perspective. We've just had a massive, as we were speaking about the downturn, it's been almost 8 to 10 years of a major downturn in our industry, and many major regulations came in. So I think we have seen the worst, and from here on, we are going to see the best. Affordability is at all-time high. If you adjust for inflation, the property prices have not risen, actually have come down significantly over the last few years. So affordability is at all-time high for consumers. So I think these are factors which are definitely going to play a positive role. And I think third, COVID has fundamentally changed how consumers have looked at residential and homes as a sector. And I think that is a phenomena which is here to stay. So I think all these three factors, give me a lot of confidence that, we are on a major upcycle. And despite these, maybe headwinds which are coming from global markets, the interest rate hikes, I think the long-term trend is very, very bullish.
Mohit, usually we make mistakes in good times. What do you think are some of the mistakes that some of us may make in these times?
Yeah, I think that's a great question. My view is that most mistakes are done in the good times. In bad times, everybody is very cautious. I think one biggest mistake people do in good times is, deploy capital in a wrong way. Because you get over bullish and end up making extremely bad capital deployment choices, which then hurt you in the long run. So I think that is one. I think again, good times give you, maybe leverage goes up because everyone is kind of saying, okay, I'll pay 10% interest, but my IRR is 25%, so I make that money. I think all of those, the risk management has to go in addition to being extremely bullish. So I think those are some of the factors, Anuj, which come to mind.
Mohit, a company like yours, Godrej Properties, is it benefiting through this consolidation phase? And if you were to look at, perhaps a similar country, not a similar country, maybe a similar trajectory which China, went through a decade ago, what are some of the things that we're going to experience as we go through this trajectory? So two questions: are you benefiting through the consolidation? And second is, some of the learnings that from a similar market as ours.
Yeah, extremely benefiting. I think all the top developers in the country today are benefiting and seeing record sales. Some of the people are here. We were talking about it. I think two major, long-term trends I see in this industry. One is the consolidation is going to accelerate. And that is because, the fundamental nature of business has changed in the last decade. From being a low equity business, it has become a high equity business after era. So I think ability to attract capital is going to be key to survive in the industry. So consolidation is something which is going to continuously go up. Just to share some statistics from China, which probably is the market we could look in future. Back in 2008-9, the top 10 developers in China had a market share of around 10%, 11%, which has now risen up to more than 30%. I don't see any reason why this trend would not be seen in India. So I think that is one. Also, if you see the large developers in China today, people like Vanke, Country Garden and all, they do $100 billion of sales.
$100 billion.
Which looks quite unthinkable, but I'm sure some of the people here are going to see that after a few years. So we should not be surprised to see mega developers emerging in India. And it's very unthinkable what the numbers would be, because nobody can envisage what those numbers would be. But just to give you statistics, Vanke was doing $1 billion close to 2004. So in 20 years, they've gone from $1 billion to $100 billion. That is just because of the way the industry consolidated and grew. And I think, so two major trends, the consolidation is going to grow, and we will see emergence of mega developers in India. And third is China witnessed growth in not just few cities, but almost 70 to 100 cities. I think India would see a similar growth in multiple cities. The tier 2 cities will start to rise. And I think all the major developers in India eventually will become national developers in this next decade.
But Mohit, it's interesting. You're saying one developer in China does more revenue than the full industry put together in India.
So we had gone to China to visit some of these
Wow.
players from a learning. And their one single project sales was more than the entire sales of our company. So that's the scale.
Amazing, amazing.
Anuj, sorry, since China is being discussed, just one more data point. I think when you said, what are the mistakes that we might make? I think China is also a good example to look at
That's
what
also a good
mistakes
point,
they've made,
yes.
right? They've gone through this absolutely, fabulous growth trajectory for the last 20 years. Sales have grown, 100x or whatever. But they're also now dealing with all the excesses that have come about because of this over-reliance on the property sector. Sales, of course, are huge. Evergrande, which is the second largest developer in China, their outstanding debt is $300 billion. In India, the total debt for commercial real estate sector is less than $10 billion. So that's the amount of scale that they went to. And I think now for them to deal with sort of unraveling that scale, which they have to, is going to take them another 10, 15 years. So my sense is the next 10, 15 years are probably going to be like a lost decade for the China property sector as they go through all the issues that they created, something that we went through in the last 7, 8 years in India as well. So there is, I think, some demerit to excessive growth, too rapid growth as well.
Very good point, Ritesh. Very good point. One developer is $300 billion. The total debt that all put together, whether it's the banks, NBFCs, AIFs, private equities, in structured debt is 9 lakh crores in India. So that is, about say 110, 120 billion dollars. You're saying his one developer in China has $300 billion of debt. So, one can be comfortable to, stay in the space where we are, but perhaps move a little bit towards a faster growth. Parth, I'm going to come to you. Let me just summarize, Mohit's point, because my next point is related to that is, I think three things Mohit said is, one, as an economy, we're doing well. Obviously, urbanization, we are benefiting out. I think the second was a very important point is the affordability is high. That means, the salaries continue to go up, but the property prices remained almost flat, as a result of which affordability is there. And the third he said is that during this COVID, there's been sort of a burning desire to own residential, and that's why, we seem to be doing well. Clearly, one of the mistakes that we made in good times is over-lever. And, sometimes greed overtakes fear very, very quickly. So, that should not happen. And finally, on consolidation, that there will be good quality developers. And this is where, Parth, I bring you into, as we are going through a consolidation, we have you as a relatively new, developer in Mumbai. So my question is, how has the journey been so far with you? How's it been?
Hi, Anuj. Before I start, it's indeed a pleasure to be a part of this eminent jury on this dais, and moreover also to share the dais with Boman Bhai, who's a friend and a mentor to me in shaping my entrepreneurial journey to where I am. He's played a role in that, significant role. So, Anuj, I'd like to put it up in a way that we've gone through a roller coaster ride across last 7, 8 years. You've rightly put it up that today whoever is standing by are the people who've consolidated, made mistakes which they could stand to correct or afford another mistake. I feel now going forward the journey which looks like as a young organization, we feel people who are going to be conservatively optimistic are the ones who are going to do well in the coming years. I'm inherently a very optimist person by nature. I feel up to 2030, 2032, it's just the beginning of this industry uptake which is taking place. This is an era that's going to be where housing is going to be at the forefront of everything that we are doing today. Of course, like Boman Bhai said, interest rates up and down, small things like stamp duty, etc. those cyclical things will happen, but inherently everyone has understood the meaning of a home in COVID times. They all want to feel secured as a family investment or the first home investment. What's going to be important is now companies which are keeping customer at the forefront of everything are the ones who are going to survive. Yes. We also as a young organization have made a lot of mistakes. But what we could correct and stand by to commit that we don't make those mistakes again are the developers who are going to do things fairly correctly going ahead. Second, now with connectivity and infrastructure work that's happening in Mumbai, now there's going to be a big paradigm shift that's going to happen between locality, locations, and CBDs, where the price parity that we used to consider extended suburbs, South Bombay, etc. In next 3 years, there's going to be a drastic shift there. So the companies which are going to be able to look forward next 5-7 years and take that into their calculations or feasibilities of what is going to happen as a buyer's mentality shift or buyer's mindset shift are the ones who are going to reach the finish line, or maybe reach the finish line making money. Because I take pride that last 6-7 years out of our 8-9 deliveries, we've barely made money in 2-3 projects. Because we've given the focus of delivering on time higher than maybe making money. That's for any new organization which essentially is trying to build a brand. But going forward, yes, it's going to be highly competitive, but at the same time, relevant players who are doing things fairly right way are going to be the ones who are going to have a major share in the whole segment.
And Parth, are you seeing the typology of the home buyer change before COVID and now?
Absolutely, Anuj. What's happening is before COVID, it used to only be what we felt as an organization, because we are mainly into the affordable luxury segment in Mumbai, which is fairly between 75 lakhs to 1.5, 2 crore, 3 crores. It used to be budget, price point, and how fast they can get home.
Correct.
Post-COVID, it's been slightly larger size, one size loser shirt. People are not feeling the pinch to pay that 20-30% higher than their budget. They don't mind that, look, we're getting a home loan, we'll take it and we'll ride the tide. But at least once we move into a house, it does not feel like a pigeon nest, but at least a home. Second, what I'm really seeing is people have started understanding, of course, there was a frenzy time in stock market, crypto, etc. Now people have really understood that if there's a home, yes, there are issues, resale takes time, everything happens. But what you can touch and feel, what you can own as an asset is being again considered relevant. So people who are seeking second home, nuclear families are splitting out, father, son are looking at different houses. That demand is still there. So I'm a firm believer there has been a shift in mindset and budgets. And also I think with the communication that's happening around, everyone understands that costs are getting up, inflations are higher. A developer, what he was maybe selling 2 years back, cannot afford to deliver a product, forget making money, cannot deliver a product at the same price points. So people have understood. So that, I can say, influx of inventory which was there is consumed. So now, if you ask me, a smaller player who's doing a micro market business, 2 larger players, all have somehow come at parity of price point, where below that, there is no rat race to sell. Yeah. We are comfortable that, look, if it sells this much, no problem. But below this, if we go, we cannot survive.
Which Parth wasn't the case.
Definitely.
Earlier, because you would see many of the tier 2, tier 3 developers would be able to bring down the price and then try and sell, but have subsequently suffered in delivery.
See, I'll tell you, I'll not name developers, I'll take my own example. When COVID had hit, we operated from a sense of fear. What was the thought that we have to complete projects? So we never thought what is the cost, what is the revenue, what is the top line, or what are the margins. We were cognizant that we don't want to spoil our name or go bust. So we sold things at fairly lower price than the market just to survive cash flows. Because largest of companies which we've seen last 2 decades have not gone wrong because of profitability or value of the assets. They've only gone wrong because of the wrong cash flow planning. So in times of struggle, surprises or uncertainty, only thing certain is what cash flow you can have in hand can survive the wave. So when you know that you're reaching the end of the shore, but you don't have that last 10% to swim through, there's no point. So I think that was those were the decisions people made considering the situation that we were in. But today, when we have ridden that tide and we are there in fairly good market uptake, we all believe that, boss, along with cash flow, you have to make reasonable margins to run the show, and the kind of I won't call stress, the nuances of the industries that we all face. It's not worth it if we don't make some money at a right sales strategy.
Super. Ritesh, I'm going to come to you. It's nice to have a private equity, sitting in there. Ritesh is the partner and head of real estate for InvestCorp. My first question to you, Ritesh, is how are the foreign investors looking at India? Are they still bullish?
Thanks, Anuj. So I think, there is certainly an interest in India. It's a fact that India is a bright spot in a global sense of gloom and doom. But having said that, I think, any investor who's looking at putting money in the country is looking at a lot of factors. I think the fact that interest rates are going the way they're going in the developed world automatically make it much less attractive to put money in an emerging market. What's happening with the currency obviously erodes everyone's returns. So I think people are looking at it from a variety of angles. If you look at foreign investments in Indian real estate, we've been in a sort of a zone for the last 5-6 years. Between $4.5 to $5.5, $6 billion is coming in every year, and that's been the kind of range which has been there for now almost 5 or 6 years. I think going forward as well, my sense is we're probably going to remain range bound. We are already hearing from investors that if we can make 4.5%, 5% on treasury bills, in the Western world, why should we come and come and put money in rupees in development projects or whatever
with the
in
risk
India?
that goes along with
the risk, obviously there is an emerging market risk that exists at all times. In India, if you're coming into development, there is a whole host of development risks that exist. And then there is the currency that comes in. If you put all of these things together, an investor will probably need to make a 30-35% rupee IRR to be able to justify taking an exposure into Indian development, which, we know those returns only exist on Excel sheets. They don't really come to life. So I think, there is all of these things that people are thinking about when investment committees are considering these decisions. For us as well, for example, to get allocations from our global balance sheet, they're looking at what's happening in the US, what's happening in Europe, and relative to that, where does India stand? So I think, yes, lots of positives for the Indian market, but it's not going to suddenly turn into, tens of billions of dollars. And frankly, having been through the previous cycle between 2005 and 2008, I would rather that it does not turn into, tens of billions of dollars coming through every year, because I think the inherent capacity of the Indian real estate sector to absorb that capital and actually provide a meaningful return to the investors is just not there.
This is my second point, really, Ritesh, is, in 2015, I was sitting with an American investor in New York, and, I was asking him is that, would you invest in India within real estate? And he turned his computer screen, and there was a yellow post-it, and it said India, INDIA. I will never do it again. And I said, what happened? He said, exactly what you said. Is 2005, 2008, we came in, we lost our shirt and pant, and we're not coming back here. So my question to you, Ritesh, is that what is the difference in thinking today versus 2005 to 8 era?
No, so I think, Anuj, anytime we are talking to any investor, this is like the first 10 minutes of the pitch as to how things have changed. And
correct.
To be fair, things have really changed. I think from an evolutionary perspective, whether it's a regulatory framework, whether it's the market depth, whether it's the quality of developers, whether it's the fact that it's now been seen in terms of track record and delivery with a lot of developers as to who is someone that you can partner with and who is it that you should rather avoid. And I think investors have also learned. So today, most of the money that comes into India is actually in relatively hedged products, right? I mean, it's largely commercial offices. Which is, as risk-free as can get in a market like this. So I think investors have also learned their lessons. Clearly, there is a lot of discernment when people are looking at coming in now, and where they put money, who they put it with, is very different from 15 years ago.
Ritesh, my final question, what is your top pick on the sector within the real estate and whether you will invest equity in residential?
So 2 questions. Top pick for us is warehousing.
Warehousing.
Throughout, at least our firm, we manage about $45 billion globally. Warehousing is our single biggest or single strongest conviction theme across geographies. So I think we are doing that in India as well. We've put some money to work. We intend to put more money to work there. We see a long runway ahead as far as the warehousing sector is concerned. If I analyze it, my sense is warehousing is where offices were 10 years ago in India. Where sophistication on demand, supply, the regulatory structure, all of that was coming in, and you were poised for takeoff. I think that's where we are as far as warehousing is concerned. So yeah, top pick for us is warehousing. And lots of other reasons, but I wouldn't get into them right now given the paucity of time. Equity in residential, difficult.
Still difficult, huh?
Difficult, yeah. Lost most of my hair doing equity in residential. Especially when you're looking at foreign investors, and dollar capital. Pure equity in residential in India, and residential obviously means development, right? I think it's a difficult sell right now, and will be for some time to come, because return expectations are so high because of the perceived risks. There's just no way to make the two meet.
And this is where I want to bring Boman and Mohit you is, because if there is no equity, then the only way is to go public. Because you can't continue to work on debt, which is what we discussed it. So how do you think that this redemption is going to come in? Is everyone, including Subodh, need to hit the browsers? That's the way that it is going to, that you'll get dry gunpowder?
So first of all, my question to you is, you said, of course, the return expectations are very high, but tell me what blocks those returns from coming in? It's definitely not the business. The business does provide those returns, but is it the taxes that come on it, or the distribution after that kind of...
Or the tenure?
So, no, I think, see, when people look at India, the amount of friction costs that come in terms of investing in a market like this, it's the taxation, it's the currency, it's the regulatory structures, it's all of those things that come together and basically take away like 10, 12%, 15% of your returns, And then after that, if you're actually developing residential in the US, you would actually end up making a reasonable double-digit, early teens kind of a return, which is dollars, right? Whether we can actually say that we can, across the range of outcomes, I'm sure there will be a few developers and a few projects which will deliver it. But if you're investing in a portfolio with 10 entities, whether across that portfolio you can generate those returns, I can't be sure of that.
So Anuj, I think the problem in the past was that, when an investor brought in the money, he felt cheated because the money was, wrongfully taken away from him. But I'd say it was exuberance on both the sides, right? Because one thought he could make tons of money, that's why he brought it here. The other thought he could return tons of money or make a big name for himself, so he took the money. And both of them were like two kids in La La Land and they got lost, right? This time around, I think there's a lot more maturity and people are evaluating issues quite well. Most of the private equity has, in a way, become debt. They're looking at some kind of a debt structure itself and
it doesn't make sense then.
I know it doesn't make sense, but given the nature of the business and the availability of funds not being, let's say, across the board for everything, and then you see the government always tightening, and rightly so, tightening the screws every single time and saying now you cannot give it for, even, I don't know how many people in this room know, but even for approvals, I cannot take money from a bank
NBFC.
anymore. So if you keep tightening the screws to the point where I have no other option and the business still continues to be something that's attractive, at least on the face of it, you will find many entrepreneurs like us taking that money. I would not say there is no dearth of money available, whether it is private money through debt route or private money through equity routes, where a lot of people want to be a small part of the larger game. I think the structured way of doing it is actually to approach the public markets or to tie up for a long term with a long term PE kind of setup. And this gives you, because real estate is all about time. You cannot start getting jittery every single day. So anything that is long term capital, in whatever format it is, and if it is truly in the PE sense, I would be very happy with it. It is in the market, if you go to the markets and raise the money, obviously you have it longer term. But I'd like to hear what Mohit has to say about it, because I still haven't ventured down that road.
I think it'll be nice because Mohit, you're the only listed guy on the panel. So is this the way to really go?
I think my view is that the sector needs equity capital.
Correct.
I personally feel any structure, and look at the other asset classes, look at warehousing, offices. Everybody has got equity capital and they have built great businesses. There have been many success stories in these sectors with foreign capital actually doing great amount of returns and build great platforms. I think what has happened in equity in residential, especially on a private side, was this whole experience people had in 2005 to 8. Honestly, we can write a book on it, on what went wrong. But largely, as you mentioned, exuberance on both sides. People, it was a very early stage situation, so people lost a lot of money. And then the next stage was, people investing after 2012. The first stage was people lost money because of lack of governance and quality of players. Then they came in with good quality players, but then the cycle turned negative. And once the macro turns negative, nothing can be done about it. I think from a overall perspective, we are much more mature market. We have very, very good regulations in place, especially like, RERA and things like that. The quality of developers today is far superior. And also we are on a cusp of a major bull run. So I think in my mind, all these factors is going to induce equity capital in the business, in residential business. And I actually have a very, very strong conviction on this. I met a lot of global investors and I see a massive interest to enter the sector. It cannot be an opportunistic play. But anyone who wants to deploy capital, China is no longer an option for them.
That's true. Yes.
And unfortunately, most of the global economies are now looking at recessions. So the shining star is India, and residential is almost the 80-85% of real estate market. So clearly, everyone sees the opportunity, but everyone is now worried about their past experiences and kind of not really understanding how to do it. So fear is creating inaction, but opportunity everybody understands. So I think that is one point. Having said that, the play happened on the equity side because people were not able to figure out that the private equity side. You see the equity markets, right from 2016-17, massive equity inflow started happening immediately after RERA because the global money realized that this is the sector which is going to do very well. Godrej Properties, in the last 5 years, we have raised close to $900 million in through 3 QIPs. And our investors have made a huge amount of returns with us. So I think equity is the play. Now whether the developers choose to go the public route and raise capital, obviously that's a great opportunity and something which should be done. But I also feel that there will be a re-emergence of private equity, the real private equity in the business with good quality players, and strategic platforms would be built.
And I agree with you, is because if you were to look at it, with China having some problem, at the global level, many economies having some problem, India is a shining star. And I think lessons may have been learned. I remember, Ritesh, from our days in 2005 and 8, when most of the private equity really lost a lot of money, and we would meet up with them again, and they would say, we have no problem, we have private equity, we take risk. But we have specific problem with India because our partner made money, product made money, we didn't make money. that is where they felt cheated in their raise. And that hopefully, Mohit, on the way that the market has consolidated, we're not going to perhaps, get those kind of players who at that time did take money without the intention of being able to partner the private equity the way that it should have been done. Hopefully this time we will have a better experience, but I do agree is that there's a great opportunity for private equity to come in and play within this market. So about 4 or 5 questions to you. One is really on this input cost, and somebody told me is that like real estate developers are like the auto rickshaw guy. Once the fuel price goes up, their meter, the rate goes up. When the fuel price comes down, the meter remains at the highest point only. So is it that the input cost went up, you increase the price, now the input cost has come down, the price will continue to remain there only?
Actually, Anuj, it's quite to the contrary. We are the industry that takes in the cost and we are not able to pass on the cost. You look at any other industry, whether it is your banking industry, whether it's any industry, FMCG, they pass on the cost. Our industry is the only only industry that absorbs the cost, and still we somehow look like, that we are some industry where we are making some exorbitant margins. So I think this is a perception that needs to change. If you today analyze the balance sheets of any of the listed players, you will not see returns more than 10 to 15%
That's a good point,
PAT.
yes.
So gone are those days where there used to be that those huge margins. So I don't think we are in that auto rickshaw. In fact, we are the victims of this. And in fact, RERA and I've been telling Boman and the leaders in our industry as to how we should be able to pass on these costs. So
yeah. My second question is, Subodh, your township has done exceptionally well, the Garden City. I mean, that's been like a machine for you. And part of the reason may have been because of COVID, that the township, people felt safe, secure, all the amenities, there itself, whether it's office or retail or education. Do you think this trend is here to stay?
So it's hard to generalize as such, but I can be specific about my project, Runwal Gardens, which we were fortunate where we got good sales. And I think in the pandemic, what people really wanted are lifestyle projects, where they have, everything within their project as such. They have large open spaces, nice public gardens, beautiful swimming pools, gym. So in our project, we also have schools, we have offices, we have a shopping center. So we have all the facilities. So our USP or our pitch is actually it's a 5-minute walk to work, walk to shopping. You can do everything within 5 minutes. Your whole world within 5 minutes. So if a project like that can be done, and if it's done and executed well, I think people would definitely prefer that.
And Subodh, have you seen increased interest from NRIs coming to India to buy residential properties during these times?
I think there's a phenomenal interest from the NRIs. I think people are seeing that, okay, finally the real estate industry in India is turning around. Plus, they are not seeing that many opportunities abroad as such. They don't know where to invest. Plus, with the dollar strengthening, it becomes that much cheaper for them to buy a house. So we are seeing a lot of interest from NRIs. Of course, with the NRIs, you have to, they will only come to branded developers where they're sure that at the end of the day, they know that they're going to get their apartment as such. So NRIs are only going to come to credible developers. And with NRIs, I've also seen that you need to give them some sweetener, some payment flexibility, some deal, something you need to throw in as such. But I think the NRI market is there, and I think by and large, we are quite bullish that the NRIs will come to buy as such.
What keeps you awake at night?
That's a great question. What keeps me awake at night? I think with reference to real estate, let's... Right now, the Diwali parties, let me be honest.
That's true as well.
So I think I sleep quite peacefully now that, in India, for the next 3 to 5 years, I think we are in a very sweet spot. If you invest now and you don't do anything stupid, and God forbid, something crazy happens, I think we are in a sweet spot. I think next 5 years, I'm extremely bullish.
I want to say what keeps me up at night. Gujarat. It's taking away a lot of business from Mumbai because we're not waking up to the challenge fast enough. And I hope our leaders, our people in positions where they can do a lot more, actually start understanding that Mumbai has a 150-year history. We've got to kind of work towards keeping it. Let us not rest on our laurels. Let us not rest on the past, and pray that Mumbai Devi, who's been taking care of this city, continues to kind of, enlighten these people. But this keeps me up at night. The other thing that keeps me up at night is, with this change in the markets right now, Anuj, the last time, we saw a whole slew of developers getting into the business and then screwing things up for everybody else by shutting projects halfway through. I always tell people that the only customer you will lose is a customer who's lost his entire money. And in real estate, that can happen. You can pay 90% of the money and still not have a product ready. And if that happens, the entire industry starts getting tainted with the black brush. I don't want that to happen. I want all projects that start actually to get completed. I want people to get their value. I mean, after they get their home, they could lose 10%, they could make 20%. Good luck to them. They're still not lost as my customer. But the moment I have lost my money to real estate project, good, bad, whatever it is, I'm lost as a customer to the entire industry. I pray that never happens. But the bigger threat is obviously we as a city need to, how do I say, there's so much opportunity, right? Just something as simple as events. Around the world, every event wants to come to Mumbai and we keep throwing them away to Bangalore, Hyderabad, somewhere else for infrastructure. You've got Bollywood. You've got Bollywood, which has been driving, let's say, residential real estate in and around that entire Andheri belt. Why don't we kind of create a better environment for them? I was reading the UP CM is creating an entire film city out there. Somebody in Hyderabad has already done it. We need to just rejuvenate what we have and, get people in. The entire diamond industry is already on its way out. As a matter of one of the exhibitors at our exhibition was someone from Surat or Baroda, wherever he was taking people away. Right? So these are the kind of things that we are having very happy. Everybody's talking about bullet train, but bullet train is only to take people away. It's not to bring people in, right? So please give me the ability to continue doing business in this golden city by giving the right stops. Don't give me stamp duty. Don't reduce it. Which will work well if you reduce premiums because that will allow me to be a lot more competitive compared to the other cities. Just a report given to, our administration was that you pay 9.5 times more for premiums in Mumbai for residential than you pay in Chennai. 20 times more than what you pay in Bangalore. And some ridiculous number
NCR.
compared to that in terms
Delhi.
of NCR. My point is, why do you allow this to happen? Everybody is trying to make a quick buck. Why can't we look at the long term? And something as simple as if we reduce premiums, BMC will lose revenue. Our Honorable Commissioner has gone on record to say my total revenue out of real estate premiums is roughly in the region of 8 to 10%. So even if you reduce it by half, it will be down to 4%. It really is not going to change his entire thing. But what he gets by revenue in terms of completed properties and property taxes thereof is much higher. So why can't we just look at it simply? Give me that, Anuj, give me that. Give me the ability to work in an area that has the potential.
Also to add what Boman mentioned, unfortunately, Mumbai is the only city, of course, we've seen a lot of improvements and transformation happening to speed up work, but we are the only city where continuously problem solving is difficult. Today, as a developer, 95% of our time should go into designing a good product, making a sales a great experience, and delivering on time or before time with a great quality product. But our 20% time goes into that and 80% is firefighting. We are actually, as developers, there's no complaint because this is the law of land as of now. I hope with our MCH Accredited as a forum, we are trying to make a lot of difference by making multiple representations. What I'm seeing is, we are only forum shopping in terms of permissions. Today, I start a building in London or anyone starts in Dubai or New York. There's a financial closure day one, full building permit is day one, and it's a 40-story or 30-story tower. He can say the last date without any issue. In our city, unfortunately, problems everyone wants to solve. but nobody is able to solve due to the systemic issues, which we should, of course, try and make a change. Then these things will happen. Second, also an interesting thing happened at our exhibition. As a committee, when we had met our Honorable CM, we requested that if you want Mumbai city to be a world-class city, now gone are the days that we want to have that flower beds or balcony being encroached and sell it, etc. RERA rules are very clear. The deviation as a planning authority, which Mr. With architect Hafiz contractor also highlighted, if we can get little elbow space of trying to create a good product, we as developers promise are happy to spend more on construction area, more on planning, designing, with no intent to sell those extra spaces. This city can have landmarks like a Shanghai or a Dubai or any other international city. But that elbow room mindset has to change from misusing area to making an area highlighted. So I think systemically the representations we are making and the way progressive, practical and positive governance has come in, I think we are very close that in the next year or year and a half, once these rules are set in, I'm sure the quality of development also will move away only from straight lines and get iconic in nature.
And Parth, it'll happen. It'll happen, as the consolidation takes place, it'll happen. But, also remember in the past, people have taken advantage. So, there is a very strong memory of what has happened in the past. Go ahead, Subodh.
Anuj, I would just like to add to what my colleagues have said that I think one more important aspect is affordability. I think we need to bring back affordability back into real estate. Today, whenever we talk about affordable housing in India, especially in these five-star venues, it's in some far-flung location away from the city. Why can't we make the cities affordable? Today, when you drive, when you cross Dharavi, when you cross the slums, what's the first thing you do? You don't even look outside the window. Actually, when you see outside, you feel sad. Because we are in this system for so long, we stop being sensitive to that. But if you really look, I want to have the next affordable housing conclave
within the city,
in a real slum. And I want to make every speaker spend the whole day there. They should eat there, they should use the bathroom there, they should talk there. Then let's see whether the next year when has there been any change in the venue.
Good.
I think we need to get that, and we are all very privileged out here, everyone out here in this room. But affordability in this city, in the country is not there.
My last question to you, Subodh, very quickly is, what is your one single priority within your organization? What is your one single top priority within your organization?
My single priority is customer centricity.
Customer centricity.
Everything that we do has to be focused, keeping the customer in the center.
You also mentioned, Parth, the same thing only. So, this is something which is coming up repeatedly for successful developers, that customer centricity is the most critical part of this. This has been amazing. I didn't realize I've got 1 minute left. I didn't realize so quickly we've been able to consume this. It's been a very engaging discussion. Happy to take one quick question. Those two gentlemen will take 2 questions. Then quickly, if you can pass on the mic. Yeah, you're loud enough.
Fantastic, I think, a panel and really solvers of the industry, but I'm not from real estate. So I want to ask some questions which possibly kind of give some understanding of the customer side. So I'm obviously my name is Peshwa Acharya. Okay, so my first question is that I've been in Bombay, let's say, staying for last 35 odd years. Yeah. And I always thought that as an HNI or a UHNI, when you are buying property in Bombay, it's like buying a FMCG stock. You're buying a levers or you're buying that. Is that any longer true or not true? Because why I'm asking this question is, for a lot of HNIs and UHNIs, your second, third, fourth home can be anywhere in the world today. Courtesy LRI schemes and all that. So that's my first question. Any of you can answer. Or you might also say that I don't want to answer. My second question is that I bought one of my homes in Bombay this year, 2022. Okay. And this is, of course, not my first home in Bombay, nor my first home in the country.
Sir, I'm being asked by the organizer to speed this up.
Yeah,
because,
I'm trying to speak faster.
No, but just say what's your question rather than giving a preamble.
Yeah. My question is that I started the process in 2021, maybe September, August.
To buy a home in Bombay.
And I executed it in 2022. A largish flat, I bought. It took a lot of time, lot of decision making. Courtesy that I have made something called a 100-point Z-score charter. That means you can actually score that property which the fellow is showing you and do a score and take a decision. So it took me a lot of time. This is available, of course, to the companies who want to take this algorithm from me. So that is available, but it took me a lot of time, a lot of effort. So still the process is fairly time consuming. And my third question is, there is an additional source of revenue to the large companies. I don't know whether they are looking at it. I got the flat in May 2022. I paid the full money in May. I got it within 5 days. It's RTMI. So I had no problem in that. But after that, getting the interiors and all is taking me a lot of time. I don't think I'll complete it. So are the organized players looking at helping the end customers and actually earning some money out of it? Yeah, so these are my 3 specific questions.
I think we can take the last one, which is, any one of you, are you looking at giving fitted out homes?
Fitted out homes, because especially the larger ones never do it. But what we've started doing is empaneling a few interior designers who've been part of the process with us, and they know exactly what kind of, so they give 3 or 4 different styles, and then we put them across to high net worth individuals like Mr. Acharya, and then let him choose from them, and then, give some kind of a deal to that. That's happening.
But that 100-point checklist is a very, very interesting one.
Are you giving it to us for free, or are you going to pay? We're going to... I'll talk to you. Go on,
Good.
Sandeep.
Thank you very much. Sorry, we're running.
Anuj, one last one, sorry.
Go ahead, yeah.
I've taken a cue from Parth here about the impact of infrastructure in Mumbai. This is to all the developers, because you're all in different geographies and micro markets. What do you think the calibration impact will be, and to what extent, be it in South Mumbai or be it in suburbs? Let's say, for example, the gentleman who's looking for a house in, say, Prabhadevi or Worli today, and if he gets all the superb quality buildings which are being made in suburbs today, what would he do, and what would that impact as an industry over a period of time? Any of you, or all of you?
So I will say the impact is going to be transformational. I think it's going to be a game changer. The way the infrastructure is coming up in the city and the way work is happening in the next couple of years, I think across the city, as you'll see the metros, the coastal roads, the MTHL, everything getting done, I think the impact will be transformational.
Then do we see price consolidations?
Sorry?
Then we see price consolidations. How will the prices will calibrate then? So for example, Sivri to Trans-Harbour Link.
Wherever there's infrastructure, prices will start rationalizing, that's one. But each area, and in each area, a certain micro market of that area will start commanding prices. I think we've had this conversation once where I told you 3 buildings on the same road, each one will have its own price point, and they could be very varied. Not like the past, South controlled the prices and North was all the, lowest down. It's not happening anymore. We've seen that with Thane also. We've seen that with Borivali also. Borivali beat everything between Goregaon, Jogeshwari and all of those areas long back because the development type was better. Today, Thana is giving a strong run for his money to Mulund. Okay. The reason is because in Thana there are pricier developments than some in Mulund also, but because that's Thana market has developed that way. So I think it's going to be the type of development that will happen. Of course, certain locations will continue. If you're seafront or you're green, you're overlooking a golf course, prices will always be higher out there. And that is where people will start paying. And communities will rule, but we'll speak about that later.
Thank you.
Sorry, we've completely run out of time. It's been very engaging, very positive session. What I have taken really 2 things is it's good times for good developers. And not so good time for not so good developers. And the second is, to make sure that Bombay does rejuvenate itself so that it's able to compete within the market where some of the other states and cities are emerging to try and take business away from Mumbai. With that, thank to all the panelists who've taken out the time and shared their opinion. Thank you very much.
Good. Yeah, I just got a mint update. Mukesh Ambani smashes his own record with most expensive Dubai villa buy. So, you know, even he's investing in real estate. Where can we go wrong?
I'm going to request our speakers to please remain on the stage. Ladies and gentlemen, first up, can we have a huge round of applause to thank all our amazing speakers? I'd like to invite on stage Mr. Vijay Kandhari, Director, B. Kandhari Group, to please come on stage and also felicitate our panelists by presenting a token of gratitude. All right, so the photographers have one last request, a group photograph, one final group photograph. What a dynamic start to the conclave, ladies and gentlemen. Thank you once again.